Hello and welcome. Today we have with us Dr. Rakesh Mohan. For the unaware, Dr. Mohan is a senior economist and former Deputy Governor with the RBI. And between 2002 and 2009, he spent a significant amount of time at the central bank as well as the Ministry of Finance, where he served as Secretary for Department of Economic Affairs. His book comes out this week. It's called India Transformed, 25 Years of Economic Reforms, and it's quite a big volume of edited accounts of luminaries, former government officials, people from the industry, people from academia. And today we're going to be talking with him sort of generally discussing India's economic trajectory over the last 25 years. So thank you for joining us.
Thank you. Thank you for inviting me.
So inevitably, when we talk about privatization, liberalization, and India's reforms in the early 1990s, people talk about, was it forced on us? Or did it come domestically? To what extent is that question important with regard to the way the pace at which we implemented reforms and the type of reforms that we pushed through in the early years?
I think that's a very good question, and particularly the way that you've put it in terms of why is that important. So let me talk more on that than whether it was homegrown or not homegrown. Okay, I think it is important mainly because if there's a large economic reform program that does not have adequate domestic generation and consensus, then a country, in this case ourselves, suppose you do such economic policy changes and significant economic policy changes because there's some external pressure to do so because you're in a crisis, the likelihood A of their succeeding and B of their being sustained is very low.
Correct.
So that's the importance of my view, which is that there was a whole background to thinking in the 1980s within the government in different ways at the technocratic level, which then led to the 91 reforms, and again, in a sense, more importantly, one of the themes in the book is that a unique feature in some sense of Indian reform process is that it's been continuous over 25 years.
Correct.
And as the recent GST suggests, and also the Bankruptcy Act promulgation, that it's a continuing process. And also what is interesting to me at a political economy level is that we've had a sort of continuity of reform across 6 governments.
Yes.
And governments of all shades, between the Congress, the BJP, the JD, etc., across these 25 years. And so that in some sense gives a good sense that even though there have obviously been differences of opinion at different times, there has been a certain consensus, even if unstated,
Yes, yeah.
on the direction of economic policy, which has been a continuous one over these 25 years.
Correct.
Plus.
That's true. So today, when we sit in 2017, look back on the last 25, 26 years, what were, if you had to pick out, 3 expectations or promises that, in the early 1990s, that we thought would come about with reforms, but, have not been seen through or only partially fulfilled, or, even where we've failed as a country?
That's again another good and more difficult question. One, I would say, particularly sitting in 2017, that one of the big responses of the new industrial policy and economic reforms overall in the 1990s was really a big resurgence in industry. There were many new entrants, there was very significant expansion of industry, there were many new players in the system, and it does seem to me, sitting in 2017, that some of that fizz, particularly in manufacturing, has gone out.
Yes.
And so in some and within that, one of the expectations as we started the reforms in 1991 was that as we do the external trade liberalization, as we increase domestic competition through removal of a whole host of controls, that in sort of economist terms, we were making the incentive structure more neutral between activities.
Correct.
What I mean by that is that through the reform of the tax structure, both tariff structure as well as domestic excise structure, that you were no longer favoring any particular industry because of the tax structure. I think that was broadly done. So one of the expectations was, and this is to do with manufacturing, that as you remove those distorted incentives, that given low wages in the country, low income in the country, that we would move much more towards labor-intensive industry, and that we would perhaps do many more activities similar to what much of Asia has done, whether you take ASEAN countries, whether you take China, whether you take Japan in the 50s, 60s, etc. But that hasn't happened. So that is certainly something that I would have expected. I think many of my colleagues expected. Has not happened. That's one. I think that, again, associated with this, in terms of policy, one might have expected more to be done on labor market reforms.
Yes.
And to some extent, this is perhaps an explanation of why this movement in industry has not taken place.
Correct.
And it's now 26 years, now that we're in 2017 and not 2016. It's a little, it's disappointing that that has not been done.
Yeah.
Third, there was some discussion, but not as much in ab initio 1991 on the issue of small-scale industry reservation. I'm confining myself for the time being for industry, small-scale industry reservation. There were 836 items reserved for small-scale industries, and these are almost all items which would lead to large labor-intensive production, like clothing, shoes, hand tools, furniture. You name almost any normal consumer item, and they were reserved for small-scale industries. Now, that process wasn't even started till the late 1990s.
Correct.
I was a member of a committee that was chaired by Mr. Abid Hussain on small-scale industry, and we recommended, I think it was 97 or 98, for a complete dereservation. Ironically, the last item was dereserved just last year, so it took 25 years.
Yeah.
So, although I suppose there wasn't as much discussion on this issue in 1991, but there was certainly a lot of discussion after that. So that also something has not been done.
That's true. But what if you look at the social sector, for instance, things like education, health, water?
So, in fact, one of the sections in the book is indeed to do with health and education, where we did have miles to go. And in a sense, there's a bit of a puzzle here. It is not just the last 25 years, the last 70 years, that one might have thought that in democratic polity, that among the things that is most important for people is access to health and education, health services and education services. It is certainly a fact that, to my knowledge, no country has developed fast and done well without relatively free services of health and education being delivered in some form by the government.
Correct.
Even the United States, of course, does not have public health services to a large extent, but even the United States, education is essentially free till the secondary level. Of course, there are variations, huge variations in quality across schools, but even in the United States, there is consensus that education must be free till at least the secondary level.
Correct.
So it's a little puzzling in the domestic polity that there hasn't been enough popular demand for that to happen, and it certainly wasn't part of the 90s reform program. I suppose in both UPA 1 and UPA 2, there was some more realization of this, so that between 2004 and 2014, you had Sarva Shiksha Abhiyan and other programs like that, but not much on the health side. So in fact, our chapter on health by Nachiket Moore and his co-authors documents this, and shows how our expenditures, public expenditure health, are among the lowest in the world, certainly much lower than our peer countries. So that's a very important area. And it's important for going forward that as you hit income levels, we're now at $1,600 per capita or so, suppose we go up to $2,000, $2,500, $3,000 per capita, etc. Now, as you go up the value chain, so to speak, and higher productivity levels, then you need a labor force with higher skills.
Correct.
And it's certainly the case that the skill composition, the education composition of our labor force is not as good as our peers. And also our health levels are not as good. And so this is something we need to act on both for social welfare purposes, but also for economic potential purposes.
Definitely, that's true. We'll get back to the question of skills a little later, but I just wanted to pick up the thread of labor-intensive manufacturing, and this was many people thought that out of the economic reforms, as you pointed out, it would sort of spring a revolution in this, but it hasn't, as you also pointed out. But was this premise itself wrong, even back in the early and late 1990s? I know you talked about labor reforms as something that could help now, but even back then, labor reforms was not as big of an issue as
no, actually it was.
Okay.
It wasn't done.
Yes.
But certainly it was flagged. And one issue that I've talked about in my chapter was one element that one view that we had was that if you are going to approach labor reforms, it unfortunately, this is around 1993-94, there was a very unfortunate term that people attached to it, which they called exit policy.
Yeah.
That's a very threatening term. And as I said, it's very unfortunate that it was attached to that. But I always talked about the industrial restructuring. And so we had worked on something called the National Renewal Fund, the whole idea was, I won't go into the detail of that, but the whole idea was that if you're going to do labor reforms, then you have to get the confidence of the organized sector labor that if there is a good amount of industrial restructuring as a consequence of the economic reform process, which included reduction in tariffs, opening of trade, greater competition from the outside, domestic deregulation, so greater domestic competition, opening of FDI, therefore greater competition of foreign investment coming into the country, etc., that there was bound to be industrial distress.
Yes.
And so the idea in some sense was that before we can do labor reforms, which provides more flexibility in the labor market, you have to provide greater assurance to labor that their interests are protected, and that if their companies get restructured and some labor has to be redeployed, then there has to be some kind of social security backup.
Sure.
So that they're looked after. So we have worked on all of that actually, with the idea that if you do this first, then it will be easier to argue for labor reform. But somehow that first step was not taken.
Right, that's true. Well, and now we have, so over the last 3 years, the current ruling government has come to power specifically with this promise of Make in India. There's a lot that is going on in the back end, but at least the public portion of it, the public facing aspect of it was that, okay, if we have a government that is, less bureaucratic, less corrupt, more efficient, more open to business, it would help. And definitely, we can say the current government may be, but Make in India still has not yielded a certain amount of success. Why would you?
This is a bit puzzling. Certainly, I think that the campaign for Make in India is in the right direction. But I have to say that I'm not seeing enough policy measures, which I think is what you imply, of how this what are the policy measures that are incentivizing or energizing Make in India. There are some moves like allowing the private sector, domestic as well as foreign, to invest in defense industries, for example. So I think that yes, that is a clear policy move which should help in terms of starting some new industries which have not existed before. One major issue which is not talked about at all is, quite frankly, the exchange rate policy. This is important to understand that if you just take the current exchange rate, it's actually appreciated in nominal terms over the last 2 years. In fact, last couple of weeks,
Yeah.
it is of the high, I think that it's a 2-year or 3-year high. And if you take real exchange rate, and what you mean by real exchange rate really is that if you take account of differential inflation in other parts of the world and us, that suppose we have 5% inflation on a regular basis, suppose others have 2% inflation on a regular basis, then simple-mindedly the nominal exchange rate should depreciate by 3% a year.
Sure.
Now that clearly has not happened. So, and there's one reason for this, which is important to understand structurally in order to be able to do anything about it. And that reason is that we have two kinds of very regular flows of foreign exchange, and both about similar amounts, about 3% of GDP, about $60 billion each, something of that order. One is remittances of non-resident Indians. So that's concerned of free money coming in on a regular basis. And interestingly, it's been pretty constant for more than 10 years, about 12 years, I think, about 3.5% of GDP. Similarly, our IT, BPO, and other kind of service exports, similar volume actually net. So you have something like 6% of GDP flows into the system, plus of course the capital flows, FDI, debt, and portfolio flows. Now the reason this is important is that if you just leave the capital flows out, just look at the current flows, that is the remittances and the service flows, that even when you have a current account deficit, that is total earnings from including these two elements, and look at total expenditure and through imports of all kinds, that when you have this 6% of GDP flow coming in regularly, that you can have almost a balance, 1% GDP, 2% GDP of current account deficit, which implies an 8% of GDP difference between the import of other goods and export of goods. That itself tells you that as far as manufacturing of goods is concerned, we are uncompetitive at this exchange rate. These exchanges may be appropriate from the economy point of view because your current account deficit is relatively balanced. So this is a structural issue, which and the importance of this is that particularly for labor intensive exports, that buyers in the world of these kind of standardized consumer goods, the quality is the same. No one is bothered whether it's made in Bangladesh, Vietnam, India or China or El Salvador for that matter. You just look at the quality and price of that good. So price competitiveness is very important.
Yes.
And so if the exchange rate is stacked against you, then it's very difficult to be competitive.
That's right. Wow.
So that's a long answer to a short question. So that's one element actually of Make in India, that it does seem to me that much greater attention has to be given an understanding of this structural issue. And then you have to think of how do I combat this?
Correct.
It is not easy. But you have to do it, in my view, to generate much greater manufacturing employment so that people are also faster movement away from agricultural labor to getting employed on non-agricultural activities, which will also improve the income levels, productivity in agriculture itself. So it's sort of a simultaneous move of improving manufacturing employment, which in itself will generate more service activity and reduce the pressure on agriculture.
Correct. And so, I mean, at this point here, so our success in trying to achieve this is, very often people try to place India on one of two trajectories. One, especially after 1991, will we follow, the East Asian sort of countries where you see high growth, high savings rate, macroeconomic stability. On the other end, people compare it to is, of course, Latin America. And recently, in the most recent economic survey, Chief Economic Advisor Surunian firmly says that we're on the East Asia track. But at the other end, perhaps the biggest economic story of the last 6 months, 1 year, especially after things like demonetization, is our inability to produce high quality jobs for our people, and jobless growth. I know there's some debate as to are we measuring formal economy jobs versus informal economy jobs, but one thing we have perhaps in common with Latin America countries is that employment and creating jobs is a big problem. So your take on that?
Well, it's difficult to compare with Latin America, and actually I worked in Latin America also in some detail.
In Bogota.
In Colombia, in Bogota.
Correct. Yes.
But one thing you need to recall is that from 1950 to 1980, there was very fast urbanization in Latin America. So they reached 60-70% urbanization levels during that period. And we have got nothing of the sort. Yes, Latin America has not been that successful in manufacturing either. So it's a little difficult to compare because the situation is very different, particularly the land-labor ratio. Also, there's certainly the income levels are much higher than ours in general. So I think that in principle we ought to be nearer the East Asians, but there are some issues which I think are very difficult to understand and why we have not moved more in that direction. Also, I think that the issue that we had talked about earlier, which as I said has been addressed in the book, is the issue of health and education. That certainly Indonesia, Philippines, even now Vietnam, and certainly China have much better quality of labor, who can then be employed in new activities much more easily. So I think that's also part of the issue.
Correct. That's true. Coming to agriculture and the shift from agriculture employment to non-agriculture employment, one thread in the book also talks about how perhaps agriculture did not get its due.
Yes.
From the 1991 reforms, and today we see multiple crises sort of things. We have the question of farm loan waivers again. The current ruling government has a plan to double farm incomes by 2022, although even the Niti Aayog has pointed out that's quite difficult, especially when you look at the fact that from 2012 to 2016 real income of farmers has declined. So what did we fail to do perhaps, and what are we still failing to do with regard to this?
Again, that's a very good question. I say this comes out in the book, particularly in Ashok Gulati's chapter on agriculture. First, just like in health and education, we did not give adequate attention to agriculture in the first 2 decades after independence. We got into food crisis in the late 1960s, then that focused our attention, and we actually then had very high level attention to agriculture, which then resulted in the Green Revolution in the 1970s. The reason I mention this is that demonstrates that if you give high level attention to a problem, you get results. So it's not the case, look, what can we do? Because there was a crisis, food crisis, we gave that attention. However, it is true that after the success, in some sense, on food production becoming self-sufficient and surplus, that in that sense the attention went away because of success.
That's true.
90s and 2000s, again in the initial phase, as we started the tariff reform and we brought down all the industrial tariffs, one of the consequences was that again you neutralize the incentive structure between industry and agriculture. And so then there's a greater, the agricultural sector gains just by that action taking place, and it did.
Okay.
What has not been done, I think, are 2 or 3 things. One, that we have been slow to recognize the change in the structure of agriculture within the country. That to some extent our self-image of agriculture essentially being production of wheat and rice is now obsolete, because as people get better off, the diets change and you have a much more complex diet, and the proportion of what people spend on plain cereals, rice, wheat, maize, corn, etc. comes down, and you spend much more on fruits, vegetables, meat, fish, eggs, milk, and so on. Now, those items, however, are much more complicated, they're more varied, there are large differences between different parts of the country, and most of them are perishable, unlike straightforward cereals.
Yeah.
And so, to cut a long story short, we just have not paid enough attention to how do we transition our view of agriculture from cereal dominated to non-cereals. And another part of the complexity is that there's much greater role for the private sector. It's much more complicated to complex supply chain, including cold storage, rural infrastructure, and so on. Now, yes, of course, there has been a pretty significant improvement in rural infrastructure, but there hasn't sort of been a concentrated attention of how to make all this happen.
Right.
Second, and connected with this, is that there was huge emphasis on higher attention and expenditure on agricultural R&D in the 70s, going on to the 80s. That has not been revived. So, if I asked you, look, name me one agricultural scientist you've heard of, I'll say, who? So that's illustration in that we have not given adequate attention, prestige, etc. to agriculture research. So you don't even have role models in a sense in agricultural research. As a consequence of Green Revolution, that policy, we founded agriculture universities in every state. You've never even heard of these in the last 20 years. And they've really gone to seed. So, to summarize, that we have not given enough attention to agricultural R&D, which will improve agricultural productivity and sort of bring it up in people's perception levels.
Correct. Yeah, that's true. I also want to, so I mean, drawing on your experience at the RBI, I want to talk about the role of the RBI over the last year or so. And so, your former RBI governor and of course your colleague, Mr. Dr. Y.B. Reddy, in his book earlier this year, he sort of jokingly pointed out that the job of the RBI is to save the economy from the government. And we've seen multiple economic policies over the last year that have sort of had, intended or perhaps unintended consequences on the informal economy. So how well, when you look at things like demonetization, has the RBI done its job with regarding to, saving the economy from the government?
Well, I don't think I would put it that way. I would put in terms of thinking and commenting on the role of the Reserve Bank. I would say the following. One, that Reserve Bank has now been in existence for 82 years. It was founded in 1935. And it's one institution that has really proved itself in terms of being a very significant stabilizer for the Indian economy. And in general, it has earned respect for its operations right across these 80 years. Second, if you also look at the impact of the external world in India, that the Asian crisis in 1996-97, and then what I always call the North Atlantic financial crisis in 2008-9, that our central bank, the Reserve Bank, operated on its external policies, that is exchange rate policy, management of the capital account, capital flows, etc., and monetary policy in such a way that the country was largely insulated from these crises. Third, that among central banks in the world, the Reserve Bank of India is among those which you might call full-service central banks.
Yes.
That is to say that it is in charge of a number, almost a whole set of activities. That is financial regulation, supervision, monetary policy, payment system, currency issue, banker to the government, banker to the banks, and also debt management. And in my view, that's among the strengths of the Reserve Bank of India, that you have all these functions under one roof. Yes, of course, there are different deputy governors in charge of different activities, but they learn from each other. And it's sort of it's a very kind of cooperative activity, which lends to cohesion. So it's kind of ironic that when the whole world actually recognized the performance of the Reserve Bank, particularly over the last crisis, what others call the global financial crisis and I call the North Atlantic financial crisis, that we had done a number of things in terms of preserving financial stability in the country, that to some extent this has not been recognized enough in the country. And so there have been a number of moves which have perhaps weakened Reserve Bank over the last 10 years, rather than strengthening it despite its stellar performance overall. I'm not saying obviously that everything they do is correct.
Yeah.
I'm not saying they couldn't do it better. But overall, I think that it's proved itself, and I think there needs to be better recognition of that, and hence behavior towards the central bank.
Could you elaborate a little bit on what you think has weakened it over the last 10 years?
Well, there's been a whole set of reports in the last 10 years, starting with the Raghuram Rajan report of 2007 or 8, if I remember correctly. Then the Percy Mistry report on Mumbai as a financial center. Then the FSLRC, the Financial Sector Legislative Reforms Commission. Each of these reports recommended dilution of the functions of the Reserve Bank. FSLRC, in fact, went to the extent of equating the Reserve Bank with other regulators, and in fact even recommend the governor shouldn't be called the governor.
Yeah.
Now this is bizarre, because in no other country in the world is the central bank placed at par with other regulators. Central bank is always the number one in terms of if there is more than one regulator. So that's just, I'm giving that this has happened over the last 10 years.
Yes.
There's been constant debate on removing the function of debt management from the Reserve Bank. Once again, no one has said what's the problem. The question I always asked is, you fix an issue if there's a problem. So you have to tell me what is the problem in the functioning of the Reserve Bank as a debt management agency. Very often when I argued this, particularly when I was the Reserve Bank, people would say you're protecting your turf.
Yeah.
What in some sense they don't know is that in 2004-05, when I was the Secretary of Economic Affairs, Ministry of Finance, the Reserve Bank at that time wanted to have, there was a number of amendments that were done to the Reserve Bank Act in 2005. They wanted, there's a clause in the RBI Act which says that it's the Reserve Bank that is the debt manager for the government. So there was a proposal from the Reserve Bank itself to amend that clause to enable the government to change that if they wanted to. From the Ministry of Finance, as Secretary of Economic Affairs, I argued then with Dr. Reddy that this was not a good idea, and that it should not be buried in half a dozen amendments that were being proposed, others which were carried out, that if this was to be done, there should be an independent amendment. So there is full debate in Parliament on that. So I'm just mentioning that I took that view from the Ministry of Finance, not as turf preserver.
Correct.
In the Reserve Bank. I don't want to go into the detail of that because that'll take too much time. Another example, that we set up the FSDC, the Financial Stability and Development Committee, under the chairmanship of the Finance Minister, where then the governor is then the vice chairman. So in some sense, it might have been, in my view, better if such a committee was set up with the governor as the chairman.
Correct.
And of course, it is certainly the case that whenever there's a big crisis like that took place in the United States, the Finance Ministry, in that case the Treasury, comes into action. There's no question that the sovereign is the sovereign. And the Finance Minister or the Treasury Secretary does have the final say in those things. So there's no question about that. Third, the selection of the deputy governors, there's a committee under the cabinet secretary. That was never the case before. It used to be decided by the finance minister and the prime minister. There can certainly be an argument that really you need a more transparent selection process. But is a committee under the cabinet secretary the right thing to do? There is a number of secretaries from the government plus some outsiders. It's, in my view, I think if you sort of said we want to have a more transparent process, it might be a good idea to say have two former governors or some people like that who know much more about the financial sector, know much more of the Reserve Bank. So a number of these ways that the sort of powers of the Reserve Bank have been whittled.
Correct.
Also, even if you take the establishment of the Monetary Policy Committee, that first, obviously this is the practice of inflation targeting and setting a monetary policy committee, something that's common across the world.
Yeah.
I don't agree it's a good step, by the way.
Okay.
But it is a common practice across the world. However, if you take some of the main central banks, you take the Bank of England to start, where we've been, many of these recommendations from these committees I mentioned, unfortunately are just aping what the Bank of England does. They haven't realized that they have reversed themselves. So we are 10 years late and doing something they did 20 years earlier. Even if you take the Bank of England, which has a monetary policy committee, who does it consist of? It consists of the governor, all the deputy governors, and then there are 3 or 4 external members. But the external the external members become internal full-time once they become MPC members.
Yes.
So it's then a fully internal committee with the governor, all the deputy governors, which is the chief economist of the Bank of England, plus these external people who for 3 years or 4 years of their appointment become internal. Same thing, similar in the case of Federal Reserve, where the Federal Open Markets Committee, the FOMC, is the equivalent of MPC. Who is member of that? The chairman of the Federal Reserve, all the governors of the Federal Reserve, plus 4 rotating presidents of district federal banks, Federal Reserve banks.
Correct.
Federal Reserve banks. And again, no external person. And the point being that this is a very responsible activity. How is a part-time member, however good they may be, so I'm not making any comment on the quality of the part-time members, who is not a full-time person with responsibility for implementing whatever you're doing. Same thing with the European Central Bank.
Yeah.
What's the policy making committee? It's the president of the ECB, all the council members, plus all the governors of the member country central banks. No outsider again, because they have the responsibility.
Right.
So my point sort of is, here what have we done? We have the governor, we have the deputy governor in charge of monetary policy, one other official from central bank, and 3 external people. So we excluded the other 3 central deputy governors.
Yes.
So you're actually losing their wisdom of the deputy governors who are, say, operating the currency system, who are doing regulation, supervision of the banks, NBFCs, etc. So we have actually handicapped ourselves when there's no need to do this.
Correct.
And by doing, of course, the MPC, you also, where the governor had the final say, now, of course, he only has the final say if there's a tie.
Right. Yes.
So there may be good arguments for having a committee approach, but nonetheless, all of these measures have been in one direction towards reducing, in some sense, the powers of the Reserve Bank of India.
Right.
And the question that I keep asking is, why? What was it the Reserve Bank did in terms of performance that was wanting?
So this is structurally, and also over the last year there has been, I would say, at least in public perception, a definite hit with regard to the credibility and public-facing trust of the central bank, and there have been many issues that have sort of piled up, and each of them have had different factors at play, whether it's Dr. Rajan's exit, or the planning behind demonetization, or the ongoing effects that we don't know the amount of currency and so on and so forth. But would you agree with this assessment that at least in the eyes of the public, the RBI is now assumed a larger figure than ever before?
That you have to tell me.
Correct, right, yeah.
So
I'm saying that
I don't think that I would want to make any particular comment on that, because particularly since most of the time I live outside, I don't have a good sense
that's true.
of the public perception in the country today.
Yeah, I would say at least there are debates amongst people who perhaps have a very layman's view on macroeconomy or finance, but who are now disappointed with the central bank and the way. Yeah,
my point in that direction, I would only say one thing, which is that if the public sees over a period of 10 years a consistent assault, and it's probably too strong a word, but a consistent sort of chatter or a consistent discussion, particularly from the government side. I said 10 years, I'm not talking about 2 years, I'm talking about 10 years. that obviously starts raising questions in people's minds. And I think that's, and I teach evolution of central banking at Yale as one of my courses, and that covers a 100-year history of global central banking. And one of the key issues that is important for a central bank is trust and confidence. And it's important for any sovereign or any government to understand that, look, the central bank is very much a sovereign activity. Yeah. It's a very important sovereign activity. And it's in the government's own interest to continue a stance which strengthens the central bank, confidence and trust in people's eyes. It doesn't mean, look, everything they do is right. Yeah. There's always tension between any treasury, the finance ministry and central banks. There's always discussion between government and central banks. But I think in the last 10 years, there has been, in my personal view, somewhat excessive public comment from the government side on the functions of the Reserve Bank. That's true. As I said, I want to emphasize that, look, I'm not saying they're God's gift to mankind in the sense they do nothing wrong. It's not very far from that. What I'm saying is that, yes, there are issues there. You need to be strengthening the functioning of the central bank, of the Reserve Bank, rather than the other way around.
Correct, that's true. And when it comes to questions of autonomy, we know now, a lot of people have come out, former RBI governors with their accounts. There's always been, tension and sort of back and forth behind the scenes and so on and so forth. But now publicly also there's this sort of, whether it's not as important as whether the RBI actually has autonomy, but whether it's publicly been seen to have autonomy. Would you agree with that sense that, now that the autonomy of the central bank has become sort of diminished?
Well, actually, I think I would refer to Dr. Rangarajan's chapter in this book, to Dr. Reddy's memoirs, the part containing the Reserve Bank. I think they give pretty sophisticated rendition of how the Reserve Bank has functioned along with the government over these years. And I think that in some ways we don't do service to the practice of macro policy by talking about autonomy or the government versus its Reserve Bank and things like that. Because particularly in developing country, you need consistent cooperation between the central bank and the finance ministry. What you want is to insulate the central bank, the Reserve Bank in our case, from day-to-day political influences, because what a central bank is there for is to provide stability in the economy, in the financial system, of course, in particular. And therefore, you have this issue of sort of operational autonomy, so that you're not told every day what to do.
Correct.
But I think that in our country, you can't escape the reality that, after all, 70% of the banking system is owned by the government.
Correct.
And so you'd be putting your head in the sand if you think that, look, the government nothing to do with banking. It's not true. Yes. What I think we had come to a modus operandi that, yes, government owns the public sector banks, but from the regulatory and supervisory point of view, we don't make any distinctions between the public and private sector banks. And if the government wants the public sector banks to do certain things, then they should compensate them. They are public sector. You have public sector banks presumably because you want them to operate some level of public policy. So I think this is a very complex issue, the issue of autonomy, independence. And what I've also always maintained is that it is the quality of, we've been very fortunate in the quality of governors and deputy governors that we've had. And again, it's very important to have governors and deputy governors who have the respect both of the people but also of the government, and because then they have more space to work in, then they also have relationships with the government where there's understanding with each other. And I think this is something that Dr. Rangarajan has always practiced, Dr. Reddy has, I think, described, that it is a give and take in the interest of fostering growth while keeping financial stability.
That's true.
So in fact, that was the title of my book, which is called Growth with Financial Stability.
Yes, yeah, that's true. This is like coming to the public sector banking system. This is also my final sort of wrapping up question. On one hand, you've spoken about there's been a bit of a structural weakening with regard to the RBI's powers over the last 10 years, but now with our NPA crisis, critics say that the RBI has been put into a role that's perhaps not suited for it when it comes to resolving NPAs and so on and so forth. What is your take on this? Has it been put in a very unconventional situation?
I don't have enough knowledge of this, what exactly is being done in terms of detail. Yes, I do feel somewhat uncomfortable with the Reserve Bank, the regulator, being put in a position of taking a number of decisions to do with specific bad assets. But as I said, I don't know enough about the current situation, why this has been done. My kind of conceptual view would be that the current issue is that we need to get economic activity moving faster. We need to step up bank lending for productive activities. And therefore, what you want is to take off the bad assets from the banks as fast as possible. So I would have been in favor of setting up a bad bank, taking all the bad assets out, putting them there. Of course, then concentrating attention on how to resolve those bad assets and get them working again, restructuring them, taking haircuts, etc. But my sort of conceptual view is essentially that what you want to do is to get the bad assets out of the existing banks so that they can concentrate on the future and they can concentrate on productive lending.
All right. Okay. Thank you. Thanks, Dr. Mohan, for your time.